Top tax write-offs for new LLC owners in 2025. When we started investing in real estate, people are often super confused about what to write off in their LLC. So in this video, we are going to demystify all those things and bring clarity into what you can actually write off. Before you started your LLC, what often happens is, as an investor, you probably already spent money on your rental real estate, right? And so a frequent question I get all the time is, well, what happens to all those expenses that I paid for in my personal name? Can I write them off? And the answer is yes. The best way to do that is to have the LLC reimburse you for those expenses that you paid previously from your personal account before the LLC was established. So for example, you had an educational course that you've taken, or even you personally paid for fees to set up the LLC. Now have your LLC reimburse you for those expenses, so then they are deducted on the LLC tax return against your real estate income. So just because you paid for them before the LLC was formed does not mean you can't write it off. You could still write it off, just have the entity reimburse you for those expenses. Now, if you had a lot of startup expenses prior to the formation of the entity, make sure you tag them accordingly in your financial statements or in your QuickBooks. That way your tax preparer will know how to treat them correctly as startup costs when they start filing your tax returns. Now, even though we're going to talk about what you can write off in your LLC, I want to first make a really important statement, which is that you actually don't have to have an LLC in order to take tax deductions. And what I mean by that is, as long as an expense is ordinary and necessary with respect to your real estate business, they are deductible regardless of how you paid for them. Now, of course, best practice is we want to pay for these expenses from our LLC bank account so that we are more protected from an asset protection perspective. And also it's much cleaner when it comes to bookkeeping and any potential IRS audits. As real estate investors, we are generally pretty good about writing off our property-specific expenses like mortgage interest, property taxes, repairs, and things like that. A couple of the things that are frequently overlooked though, one is actually insurance expense. I'm not sure why, but a lot of times when I review tax returns done by other CPAs, I often find insurance expense being missed. Now, as a property owner, especially a landlord, you generally are going to have property insurance, right, to help make sure that you are protected. So make sure that you are claiming insurance expense that are paid, again, whether you're paying it directly or it's taken out of your impound account, or if it was paid by an entity, make sure those are captured one way or another. Small things matter as well. You know, I think people tend to overlook some small supplies and things like that used for your rental properties, but those things could really add up over time, especially if you're someone in either the furnished rental space, like a midterm rental, or short-term rental space. You know that little things, even like toilet paper and salt and pepper, those do add up. So make sure that you are paying for those things with your LLC credit card or ATM card, so that you are tracking and deducting those things. If you use your vehicle for your rental properties, make sure you're claiming your business use of car expenses. Now, with respect to LLCs, especially for new investors, a lot of times your car is still going to be owned in your personal name and not in the LLC. And people tend to think, well, maybe then I can't write it off, and that would actually be incorrect. You can write off the business use portion of your car regardless of how title is held. What you do want to make sure to do is to be able to document and track the business use percentage of your car expenses. And what I mean by that is, first we want to track our miles. What are our business miles with respect to real estate versus our general miles, personal and things like that. And why is this important? Well, because when it comes to taking tax write-offs, we can either use the standard mileage rate or we can use actual expenses. Actual expenses is by taking a business use percentage of your total gas, depreciation, repair, oil change costs, and writing them off against rental income. And so the way that you know how to determine your business use percentage is by taking a look at miles driven for business versus total miles driven for the car. What I love about this is that the IRS gives you a lot of flexibility, and we can choose whether to take the standard mileage or actual expense method. Whichever one gives us the highest tax benefit is the method that you can choose. If you're like most investors, you're probably not renting a space to manage your own rental properties. So if you have an eligible home office, make sure you are claiming your home office expense against your rental income. Now, similar to what I just said about the car, obviously your home is generally not titled in your LLC, but that does not preclude you from taking the home office tax deduction. Simply have the expense written off in the LLC tax return to offset the rental income. You can continue to pay for your home office expenses personally because it's still a personal item, but your tax preparer will then just be able to take a portion of that as it relates to business and then deduct it on the LLC return against your rental income. What's really interesting about home office is that you can utilize this strategy even if you don't own your home. So if you're someone who's actually renting for your primary home, you can actually deduct part of the rent expense that you're paying to the landlord for your home as well. Other common expenses to deduct through your LLC: professional development, professional education if you're going to real estate conferences, the flight to get there, the tickets, the hotel. Those generally are going to be tax deductible, provided you can show they're substantiated for real estate purposes. Also professional fees that you pay to your accountant for tax planning, for your attorney to do legal entity structuring, and all those are legitimate tax deductions. So make sure you have a way to track it so that you can write them off on your entity tax return. One thing I always recommend is for your new LLC, you want to make sure it has an EIN number with the IRS. With that, you can open a bank account and a credit card account in the name of the entity. What that does is it helps you to separate your personal and your business activities, and it comes a long way if you're ever audited, so that you can show that this bucket are where you have your business income and business expenses. And having different bank account just for your real estate activities will go a long way to simplifying and automating things when it comes to bookkeeping. So instead of sifting through thousands of transactions, everything that goes through the entity account, you can count on them being business expenses, and that makes bookkeeping a lot easier. So there you go. These are some of the common expenses that you want to make sure you are taking advantage of for your new LLC as a real estate investor. If you have any questions, make sure to drop them in the comments below, and until next time.